Morning, Steve Ray in Chicago with the morning grain comments. Well, yesterday's trade was a little disappointing in the grains after it was announced that China had agreed to allow crushers to come in and buy 10 million tons of U.S. soybeans. There might be some corn and wheat involved. There was a lot of talk in the trade that right now the buyers are not interested in buying U.S. soybeans because they have coverage for the next 6 to 8 weeks. And Brazil soybean prices are still cheaper than U.S. prices, even if they drop the tariff in China or subsidize the tariff in China. So we're in a kind of a consolidation mode. The end of the week is usually demand for U.S. products. And so first off, we've got the ethanol numbers today. We've seen a pickup in production, but we've also seen a pickup in margins. And so they're actually positive for the first time in a long time. The question is the production going to be enough to meet the USDA's forecast? And all eyes will be on Washington to see if they come up with any new policy on biofuel demand that might help demand versus the waivers that's hurt demand. Then we've got export sales tomorrow. We expect that the numbers will continue to show 300,000 to 400,000 tons of wheat, probably 400,000 to 500,000 tons of corn, and we need about 800,000 tons of corn to meet the USDA's goal. Right now, the Black Sea and South America corn prices are much cheaper than U.S., so we doubt if we'll see new dramatic increase in sales unless China comes in and starts buying some U.S. corn. And as far as the beans are concerned, we've been selling about 1 million tons a week. We'll see if that continues or if China is going to take a break for a while since they have coverage from South America. U.S. Weather looks okay. Looks like the Canadian low pressure system is going to push down into the U.S., causing colder than normal temperatures, but it's also a drier than normal pattern, which should help harvest. Farmer is still not selling, and there is a lot of people out there that feel that last 20% of the corn and soybean harvest is going to show much below average yields and much below what the USDA is saying. There is a conflict in price discovery right now. You've got a lot of people that think that the lower U.S. supply should push us through new highs. But everything outside the United States, production, demand, economy, is all bearish to prices. So we may be stuck in a consolidated trading range until we know more about the U.S. supply. And then finally, as far as the funds are concerned, going into the end of the month, we estimate that they have a small short wheat position, short about 80,000 corn and long about 60,000 beans. It's interesting to note in September, China imported 140,000 tons of corn. Year to date, they're up 33% as far as corn imports. Pork, they've imported 161,000 tons. They're up about 43% year on year. And beef imports were 152,000 tons, and they're up 53% from year on year. So again, when you look at meat demand in China, when you look at corn demand in China, it seems to be going up rather than going down, and that could offer some support in global prices. So again, consolidated phase. Weather looks okay globally, and we'll just see which way the market wants to break out of this trading range. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.